Welcome to Quantum Finance. My name is Parker. I'm the head trader here, and this is our day trading recap for Monday, November 13th. So, looking at the daily and weekly chart of the SPY, as you can see here, small green day today here in the stock market. Looking down here at the volume, very low volume day to start the week. Very low compared to that volume we got on Friday. Looking at the weekly chart here, as you can see, nice green start to the week here, opening above that weekly midline and above these previous swing highs back here from October. So still in a pretty bullish postured kind of price area right now as we are holding above a key level, but the market is overextended to the upside, in my opinion. So when it comes to identifying the trades today, I want to turn to our 2-hour charts. So if you look down here at the trend flex, as you can see, we had upward positive trend, which is an indication of a strong momentum trend to the upside. So with this, we were using a momentum-based strategy using EMAs, and we did not use our Bollinger Bands today like we did pretty much all last week throughout this blue choppy phase. And we also had strong green candles here on our impulse candles going into this morning. So we were looking for a momentum trade. So now I want to turn to the 15-minute chart. So I was bullish on the day mainly because of the price action we got on Friday, right? We got a break of a major level, that high from October, right? We broke through this swing high from October on both the SPY and the Qs with very strong volume. So we did get a break of a significant level. So I was bullish because of that and of this all this strong buy volume we got coming in on Friday. So when it comes to the trades today, as you can see, we're here on our 2-minute screen. We did have a big gap down this morning, breaking down through the open and through the 100-day moving average. As you can see, pulling down here into this 200 EMA here on the 2-minute chart, which also lined up with last Thursday's highs. If I zoom out here, as you can see, these are the highs from last Thursday, and they are plotted right here on our chart. So I did like that as a nice area of support. Honestly, I was kind of hoping we would get down to that October's high, which is down here, but this was a pretty strong level of support. So that is where we started to build our long position here. So yeah, this was the first entry as we pulled into that 200 EMA and Thursday's highs. And then we waited because this was a counter trend trade, right? We were downward and we were below all of these major moving averages here, right, on our momentum. So we were waiting. We just got a starter position here, and then we were waiting to see if we flipped bullish, getting back above that open and that 100-day moving average, which is exactly what we got. As you can see, price getting up here, pulling down into the open. We had the trade line, the 8 EMA, cross above the 21 EMA. And when you see that, when you see shorter moving averages cross above longer ones, that is typically a bullish catalyst. As you can see right there on top of the open and the 100-day moving average. So this is the average price for the past 100 days in the stock market, right? So this is a very significant level that we were looking at. And as you can see, pulling down into that, and that was our second entry when we got into a full-size position, right? And we were looking at the 441s on this. If I could go back, I'd probably look at the 440s because as you can see, this chop around for a while and took a lot longer than I was expecting. But as you can see, the first take profit here into this gap fill. If you look here at the 5-minute, I have a line drawn from that gap fill. As you can see, first take profit into that gap fill and second take profit as we broke through Friday's highs. This was our final and take profit here because I really didn't like this price action. Honestly, like all these wicks, I thought it would be cleaner and more of just a stronger move to the upside. But I did see this as like weakness, right? It wasn't as strong as I expected. And I did have these 441 strikes. So as we broke through that strike price and became in the money, we got a nice move on those contracts. We can actually pull those up right here. So we were looking at these 441s, as you can see up here on the top. In that entry, that first entry was down here at about, that we got in about like 19 cents. And then as you can see, that second entry was pretty much at the same spot, about that 22-cent level. So the price was significantly higher, but due to the time decay of how long this took, right, the entry price was about the same. So we'll call it a 22-cent entry here. Then on that first push up for your first take profit, you're looking at about 104% gain. And as these contracts went in the money, up there, breaking through Friday's highs, you're looking at about a 310% gain on these contracts. So really nice momentum-based call options today. Really taking advantage of these EMAs here, as you can see, getting that bullish cross right above the open, right above that 100-day moving average. As you can see, getting that bullish cross here on the 5-minute as well for that nice move up to break Friday's highs. And then this second trade, there's a lot going on in this trade that we need to talk about because this was pretty complicated here. Actually, I want to go to our 2-minute chart and I want to show this, right? So let me pull up those levels. So this is an obvious bull flag, right? You have your big move up, and then you have your bull flag down. So pretty much all traders, when they see this pattern, they're going to draw out these lines, right? And it's a way to identify a bull flag, which is a bullish continuation pattern. So typically when you get the break of that downtrend line, right, that is typically the entry point on either the break or the retest that most traders will get long for a move to the upside. So as you can see, we had a false breakout here, and then this pullback. I actually entered into this, right? They baited me in, the market makers did, right? They pulled out a false breakout, right? And then they pull you down, and then they actually wicked down through that lower trend line. So technically speaking, this was a breakdown of this bull flag, right? The pattern should have been invalidated. But as you can see, they stopped a lot of people out on this, right? They baited everybody in on this false breakout, and then they stopped a lot of people out here on this false breakdown. And then as you can see, then getting the move to the upside, right? So this is the market makers doing psychological warfare here on retail traders, right? Because, you know, everybody and their brother is going to have a really nice large bull flag drawn here. But if this mainly gets a lot of the micro scalpers, right? Like if you're just looking at 1 minute charts and just trying to be in and out in a couple minutes, like this can really, this just gets a lot of micro scalpers, right? Like if you're in on the 1 minute chart, this could really, you know, stop you out here if you're looking at small time frames. But I want to go to our 3 and 5 minute charts here. So if you look here at the 5 minute chart, you can see the large bull flag pattern. But if you look here, we actually never got a 5 minute close below that. So I actually did not get stopped out on this. I actually held through this. And then let me pull up the trades here. So I got long here on this retest of this 2 EMA. And then I just got flat here because when I saw that manipulation, right, of this bull flag, I realized that this probably wasn't going to be a typical pattern like how you would expect to play out. So I just got flat here as we pulled into Friday's highs. And as you can see, it just kind of chopped sideways into the close. As you can see, that exit there. And I was actually looking at these 441s as well. And when it comes to taking a second trade on today, like I took a much smaller position size, right? Like, cause we had a very nice trade in the morning. So this second trade, I reduced my risk significantly. So even if these contracts went to zero, I would still make money on the day. That's good risk management there, right? Don't risk more on a second trade because the main move already happened, right? If you're going to take another trade, take a much smaller size to secure the profits on the day and to just reduce overall risk. So we got in here at about, I think it was like 35 cents. And as you can see, we held through a 60% or like 53% decline in these contracts, right? But it never invalidated that lower trend line on that 5 minute chart. So we held that. If we would have got a 5 minute close down below that level, we probably would have stopped out. But as you can see, pushing into that high right there from Friday, looking at about a 56% gain. So yeah, we just got flat onto this once we identified that the market makers were definitely in here manipulating the price of the market. We do have CPI data coming out this week too. So yeah, the market makers, the puppet masters, whatever you want to call them, were definitely in here messing with the retail investor. So yeah, small green day to start the week, very low volume. CPI coming up later in the week, so definitely be interesting to see what happens with the market if we keep on ripping higher or if we do get a bearish reversal coming in. But yeah, that'll do it for the video. Appreciate y'all watching, and I'll talk to y'all later.